Welcome to the Growth Zone. Why is now the right time to invest in venture capital related activities? So, have a look at what is actually possible in the market. Here, you can invest your money in companies, in shares, in stocks, in options, in mutual funds, or even directly into companies and other kind of things. As well, depending on the type of investment, this investment might be even an investment in a business that invests, for instance, in buying property, or an investment in something that goes, for instance, into the cryptocurrency way, into blockchain, all these other things. But let's have a look at a typical spread investment from investors that invest in a variety of things. I'm looking at this from a perspective as I had developed several years ago a software for an investor who has, I think, about $7 million that he invests in different kinds of industries and products and that. And he used our software to monitor the whole thing and eventually as well add even older historic data from old investments to see as well how he was actually performing. And that's the thing. Venture capital, whether you're investing it directly into the business or into a vehicle that's actually helping you to get your money into the business and get a certain share and recoup what's coming out as a benefit, that's something that depends very much on your approach. But looking at venture capital, so venture capital means that you are putting your money into something that is working. It's not like stock. With stock, you just have a share and then you haven't really actively got an insight into what's happening with the business. And usually stocks are big companies, so big companies are like big container ships or oil tankers. They're very slow. Of course, the risk that something goes wrong is very low with those. But even the stock exchange can go bad and can go down and you lose a lot of money. You can make as well a lot of money. You can double your profits. I did that once as well. It was being at the right place, right time, buying the right thing, deciding to buy one, going big into it, and then 4 months later selling it out again and doubling my capital, which was definitely profitable. And it didn't matter with all the transaction costs or the taxes and other things. It was really worth it. But when you are going into investing your capital into a smaller business that's doing something, whether it is a disruptive product, whether it's a medium-sized company that's developing new products, new services, or expanding into other countries and other regions, that's something where you are taking a certain risk. Or, for instance, you're investing in a fund that has several ships, and these ships are moving around. They're getting containers, goods and everything, shipping back and forth. There'll be some times when maybe the global economy suffers, like now, for instance. Then, of course, there'll be fewer containers to be shipped back and forth. There are small feeders, there are big feeders, long distance ships, and that. So in the end, there's of course always an outside influence. With stocks, you don't have that. Of course, you could say, well, then I just go and put my money into these funds. I mean, funds like that have a variety of complex investments in different kinds of businesses and other stuff. They have one big disadvantage. You are paying a huge fee for those who are managing it. So you have low risk, low return on investment, and the management always benefits even if you are losing money. Exactly. They benefit even if you are losing money. And that's the problem with funds. When I started with age of 17 to invest in different kinds of businesses and funds and so on, I first, of course, started with funds. I invested that money that I used to earn as a schoolboy, making money here and there, working in shops and making money. After school, I invested it in different funds. I grew my investment, and eventually at a certain point I had a certain level of investment, moved with that out of funds partly, put it into stocks, and eventually moved the rest as well out of the other funds into stocks, and started trading stocks. And had all different things. I had shares from Coca-Cola, from BMW, I had Microsoft, Oracle, all different kinds of companies, from energy, automotive, electronics, software, foods, all different kind of industries in different countries. Yeah, and with some I made profits, with some I didn't make quite some profits. And some I even sold on, and later on these were good decisions because the person who took them over made quite a good profit, which confirmed that my investment strategy was right. Another thing why I left, of course, that area was because I needed the cash for another investment. And that's the thing. When you move out of certain products and you invest it, you have to accept that, of course, there's a certain learning curve that you'll have to go on in order to learn how to improve your investment into ventures. Because as you go from funds to stocks to eventually venture capital, your risks increase. Nevertheless, how do you track that even? Well, let's take the example of that software that we had developed. It was a software that you'd use on Windows. You'd enter all your key data, for instance, how much you'd put in, when you'd put it in, what are the different taxes and so on that will be paid, when did you get money out and in and out, and you would see then as well eventually trends as you'd maybe add more money depending on the value. You'd enter all these different informations over the years, and you'd see, okay, is everything going well, or are we going in a spiral downwards to hell? So that's where you can go and track and see how it is running and what to improve and do differently. But yeah, there's definitely a big difference between venture capital and stocks and funds. Because, of course, with venture capital, if the business goes bust, and that's a high risk that is present with venture capital, you will lose the money. In venture capital, they usually say that out of 10 companies that you invest in, usually 8 don't make it and 2 are highly profitable. The thing is, you have to try to pick out the right 10 so that you have the chance that 2 are really, really very good in their performance. So that doesn't hurt you actually losing 8 investments, because those 2 will be so highly profitable that'll give you money. Of course, you say, well, then I should just invest in 2 instead of into 10, because why waste the money on the 8? The thing is, you don't know which of these 10 are going to be those 2 that are going to win the race. And of course, it could even be worse, that maybe you have a bad time and none of those succeed. Or they all more or less succeed, but they're not highly profitable. They're just surviving, they're not dying. So they're saying, oh, okay, everything is okay, but we're actually not reaching the high profitability that we want to have. And we just can pay maybe just barely out things that are coming back, but it's not a high return of investment. So that's something that you have to really consider, why it is now the right time to invest in venture capital and into this kind of activities. Because the thing is, it can be, for instance, any kind of ventures. It can be related to properties. One of the typical examples would be, for instance, investing in flats or houses that you can convert into multi tenant objects. For instance, buying a commercial building and turning it into flats. Yeah, one big commercial building could generate you 100 flats. And these flats pay you every month rent. And that's a huge profit eventually when you look at it, what over the years you have to invest into it and what you're getting in return. And the contrast, of course, it might be that you have property that you can turn into an industrial complex and get some company that's willing to pay a lot of money to locate there. And then you sell the property at a high price. Or you do a double game, buy commercial property, make it into houses, and at the same time sell a good piece of land to a big company who will then want to get their staff homes. And those will be your flats. So those are your tenants and you do a double game. You can't always win. So venture capital can be as well in totally different things. You can invest, for instance, in software companies. Companies who are developing new software. Cryptocurrencies used to be a big topic. It's, I think, no longer a big topic. Things have changed. There's been lots of scams and different things, and maybe the infrastructure, the technology in the world has to first adapt further to give a second chance for cryptocurrencies to live on. I wouldn't invest at the moment in cryptocurrencies. That's something where at the moment I don't see the right time to invest in new things. And especially some of the things that are out there are being offered now. A lot of them are scams, and you see it as moving. Their offers and their descriptions and so on, certain things just don't make any sense. So I wouldn't invest my money in there. But that's relating to all new cryptocurrencies. Existing cryptocurrencies, we'll have to see what happens, what survives and what is able actually to really move on. There'll be more currencies and fintech areas. Some fintechs will be becoming highly successful. Others will disappear. That's evolution. And that's as well for any other kind of industry where new businesses are coming, old ones are going. And that's of course frightening as well for many people who have maybe even mid-sized companies, because even if your company's been there for 300, 400 years, something can change in the market that nobody wants to buy from you anymore. And then your 300, 400 year old company disappears. And the thing is, it's not necessarily that your products, that the products are not needed, but actually they're being sold in a different way. They're maybe even provided in a different way, maybe even more innovative. They are maybe introduced into a combination with other products. And you're still doing the old style, you'll be out of business. So, investing now is the right thing because everybody is now scared. When you invest against the cycle, you usually win. As an example, many years ago, there was a big release of shares from a German telecommunication company. And everybody ran there to buy them. I had some friends who spent quite a lot of money on this. And I thought at that time, nah, I'm not going to put my money in there. It's going to be burned. I invested my cash in other ventures. And what happened? They lost all the money, or it reduced itself to a sixth of the value. So they practically, from having invested 60,000, at the end maybe they had, if they were lucky, maybe 10,000. The money was burned, it was destroyed. And that of course did a huge damage as well for the trading environment, because of course then consumers learned that they shouldn't invest in things that they don't understand. And it's the core thing. Even a consumer can invest in venture capital, in stocks, or any kind of things, or funds, or anything. But if they don't know what they're doing and they're not informed properly, they're going to lose their money. And that's something you don't do in other places either. But sometimes something really happens, and that is greed. Greed turns people into doing stupid things. because then they decide, oh yeah, I'll be billionaire, I'll have lots of money, I'll do this and this. It's a get rich quick scheme, actually. And the thing is, there are plenty of things happening out there that absolutely are valid, are legal, but they're actually being built on the same strategy, and you shouldn't put the money in that. That's a big thing that people are making a mistake on, because they're investing in the wrong things. So you have to invest in things that are physical or are going to be used. As an example, properties. So everybody needs a house, everybody needs to live somewhere. Or buildings, commercial buildings, yes, some buildings you'll need, but if you go to the cities, especially now, there'll be a lot of companies who will be thinking, do we need that much space? We're paying rent for an office, a huge office building that we can't even use because we're supposed to be socially distancing ourselves. And what if every year we'll be having this kind of viruses coming and hitting us? We'll have to have more dispersed units. But if I take a building that maybe takes 1,000 people and cut it into 10, I have 100 people. So I have to put my 100 people in different locations so that if one person gets sick, not the entire 1,000 gets sick too. But it doesn't make sense if I say, okay, everyone is in one level of the building. It doesn't help because everybody has to take the same elevators. Everybody is going to the same canteen. It's not going to help. So commercial investments are going to be a high risk thing in the next few years, because people are not going to be investing there. And now you'd say, but they're telling us we're supposed to buy and invest in that. Yes, I know. That's why I don't listen to what bank managers tell me. They used to tell me a lot of stuff. But ask a question. Why are they still working there if they're knowing what to invest? Because if they knew exactly what's the right thing, even if they put their service in over the 40 years maybe that they're working with the bank, they would be billionaires by now. By the age that they're going into retirement, they would be billionaires. But they aren't. They're making barely money because they don't know. They're just being told what to sell. And people are buying that, who are not informed properly, who are not educating themselves on what to put the money in. That's why that's one of the first things I learned. Don't listen to a bank manager, because he's just trying to sell you stuff he wants to get rid of. Well, his boss or his bank wants to get rid of. And that's the same thing. There are people who have got investments in commercial and they're telling everybody, go and buy commercial. And then they get rid of their commercial, which might not be so awesome. Yeah. For me, I have no problems. I haven't got any investments in properties. I haven't got any investments. I think I've got one stock anymore. One stock of shares, yeah. But I'm not telling you to invest in shares. I don't own rows of houses with flats, but I know what's sensible, what I would invest. I can tell you that. But it's up to you. You have to inform yourself and think, what should I do and what should I invest? But I'm not telling you to buy it just so that you buy the shit that I want to get rid of, because I haven't. So you can't buy anything from me, and I have no conflict of interest, as we say. So have a look at what you can really do and change in your investment strategy and see what makes sense. Question things that are being offered to you, because that will be otherwise a way of losing money. I'll be talking more about these topics as well, and how to invest your savings and even your business profits in today's times, where you can do this. And it doesn't matter in which country you are, which jurisdiction or what kind of area, but there are a few basic things that you have to check and try to avoid. Otherwise you'll be losing a lot of money. And I think in the past many people have lost money to different kinds of legal or unlegal scams, and that's a thing that should be passed. But if you invested the money on something and you burned it, that's your own fault, because you should have focus more on what you do. And everybody of us has made mistakes. We've invested money in gurus, we've invested in different businesses, in stocks and other things. And in projects, internal projects, things that went well and didn't go well. So that was the Growth Zone with Christian Bartsch. The topic was, why is it now the right time to invest in venture capital related activities?